The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman here on the Tiger Financial News Network. This is, of course, the Tiger Technicians Hour. And now let's go to the, this is Friday. Let me just finish typing. This Friday, the 18th, and we're looking at the Dow up 60 points. It was down earlier. It made a lower low than, the lower low than, oh, it actually went down to a leg B, another leg B to the downside. Really important that it has some kind of a balance here. All right, let's just get to the nitty-gritties. I've got a ton to do. Dow's at 55 at 34,368. There is still just an arch formation. Yeah, there was a little mini M. I had said that the H could go to an M pattern. That's this right here, where you come down sharply. It's red because if you take out that left side low after especially a peak A or a B, this happened to go to a C. That's why I thought it was a little bit more positive to hold to make that second arch formation. If you hold nicely, you can make a second arch, and then you've got to be careful because if you take out that left side low, that could be quite important. And usually it's kind of a culmination of a rally back into the rectangle formation. In the meantime, back at the ranch, let's deal with what we've got. We've got a pattern that says this is a decent rally from the 36,952 all-time high in the Dow on the 5th of January down to less than a month later, 24th of January, 33,150. Yep, we went to 35,824. That's about just over 50% gain. And now we're pulling back. But what's really important about this is that rallies have been failing for a couple of reasons. And I want to put the geoeconomic, political aspect into it because I think that I'll do a little more on Walmart in a moment. Now, Walmart used to be in the Dow. It's not in the Dow at this particular point, but it is. Where am I typing it? Typing in the wrong place. Let's type it over there. It is important because if you look at, and I'm going to be jumping around. This is Technical Friday, and I need to jump around. So look, a huge move up in Walmart from the 132.70-ish low, double bottom low. Remember, we're talking about double bottoms and double tops. I'll talk about that as soon as we get back. But look, Walmart had in a weekly chart back at that high of the week of the 20th of August, it went to 152.57. 153.65 was the high in December of 2020. So you know how I'm talking about months and months. We've been looking at the potential for double tops and double bottoms as a really important turnaround indicator. Doesn't tell you whether it's near term, short term, intermediate term, long term. Doesn't matter. That's what you want to look for. So what we're looking at is Walmart made a double top and then a triple top because in November it went to a round number 152 high and it's pulled back. But it hasn't broken down, and it came out with good earnings. And basically what I'm saying is, in this particular market, let's just go through this before I go through to the other indices. Look, the Van Eck Retail ETF, the RTH, has 20% Amazon. Maybe that's changed. I took that number from what I was looking at on the internet. But here it is at the 200-period moving average, having gone from just about 200 down to the 170s, bounced to the 185, 86 area, and now it's kind of struggling. But look at the XRT. This is it's an equal-weighted ETF, S&P Retail ETF. And this has Amazon in, but it's all weighted. And it probably has a Walmart as well as a part of it. Now look what we're looking at. It went to this peak C. It hasn't been able to break out. And this is the general retail market. This is not very good. I'd say that this peak C here in the monthly chart actually looks like a D. The candle, this is with an inverted little mini hammer It's like a star, evening star, but this is not the issue. The issue is that it has been failing for 3 months, and these are the 3 months that, well, January, February are usually quite weak. December shouldn't be too weak, but it is. And now we're going to see what happens. So I think that investors have been spooked by the geopolitical aspect, as well as the earnings reports that are coming out that are starting to see the tech sector completely fail for months now. For some of them, maybe it's weeks for others, but it's months for most of them. And everything you want to get into starts to have some kind of erratic behavior. And that's just saying to me that in the overall market, one of the reasons why we're looking at, for instance, here, the S&P is, I typed it in the wrong place again. S&P at this particular point is, there we go, doing almost the same pattern as the retail. The only difference is that the monthly chart, this is the first monthly chart where we're coming down. This is a weekly basis. Today's Friday, and that says to me, now you've got to take into account the fact that this Chapman wave Roman candle, I typed it in right there. Maybe I'll make this bigger. So I'm going off topic right now. I wanted to do this for subscribers, but I'll start it off right now. This Chapman wave Roman candle, that is the January candle with a new all-time high of 448.18.62 in the cash S&P. The rule of thumb with this pattern is, and we saw this back in 2007, we had that in the Dow, we had that in a couple of the indices, a couple of the stocks, especially in a monthly chart. If there is a breakdown on a weekly basis, you have to go to a smaller time frame. And there's a close below the halfway marker of the lower wick, the long wick. And that says a close below 44.30. And here we are at 43.81. There's no way today that we're going to get to 44.30. Now, in the markets, you must never say there's no way, but I'm going to say that today there's a 98.9% chance that we will not make that halfway marker today. So we are now under the 44.14 level of the 9 period, the green 9 period moving average. That's maybe a little bit more reasonable if some hysteric move to the upside. But this is saying that there's a really good chance that you're going to retest the low. What's the low? 4222.62 made on the 24th of January. That's not the end of the world. I mean, consolidation after move from 2190, well, let's call it 2200 to 4800. I would say that that is a whopper of a move, and you can expect some kind of a pullback. Okay, I wanted to just discuss this in just pure technical terms. Those are Chapman wave techniques, and we'll see, because that would say that next week has to be a really strong week, because the rule of thumb that I have is that a key function of the candle says that if there is a close above the open of 45.19, that was the open coming into February, that says you could have ameliorated some of the downside move. Now you can maybe move sideways, but you're still in a consolidation. I'll be back.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, it's May 24th is on Thursday. Okay, so question about Square. They call themselves Block Inc., but they're still Square to me. Made a 289.23 double top. Look at that. I talk about these double tops. 283.19 on the 19th of February of 2021. August of 2021, it goes to 289.23, 4 cents higher. And then it does the rectangle formation, the triple top, the W formation for that double cup formation, and then plummets right through the 192.21, plummets right through the 192.21 support and is trading right now at 99.53. 99.50 was the low, which was a little test of the previous low, and that was on around about the 7th or so of Feb. And here it is at 99.72. Oh, it made a 99.40 low just moments ago as I was typing this up with a question. They have earnings coming out on the 24th. And this is what I'm talking about. When money has been lost, I'm sure we all know people who had bought some of these really high-flying tech stocks and had done extremely well. I'm sure we also know that some of those people thought of it as long-term positions, and I don't know, but some of them might be in it still. And you know, when something's cut from going to a high just about 290, and is now trading 200 points, almost 200 points lower than that, that's a hurt. That stops them from, getting back into the market in a full a flow of money that goes out as part of your investments. All of a sudden, you're holding back and you say, I tried to double down, tried to triple down, and now look what and it just sits in you. Even if you are the one that has bought, say, USX, and it's doing fantastically. Even today, it's holding up nicely. It just hurts. It sits there like I always think of these owls sitting there going, wait, I told you, wagging a finger, which is your conscience, because while you were doing some of this, something was saying to you, hey, it's not doing what I wanted. Why am I adding to what it was not doing when I wanted it? Anyway, so that's the expression is, if you double down, and that was your plan. In other words, I was listening to Tommy Jr. earlier with his show, Market Kickoff. And he talks about starting a position because you've got a longer-term outlook. And that says, I'm not looking at this now, but in 8 months' time or 6 months' time, it better be doing what I want, but I'm starting the position because everything about the company that I understand is really good, and they've just been dragged down by the market under different conditions. Therefore, I'm going to start a position. But my plan is, it's at 30 now. I'm going to put in another little bit at 25-ish. I don't know, I'm just making up numbers. And maybe some outlandish thing saying if it drops to 20, drops 30%, that's where I'll add the other one. I would prefer not to even get that. I'd rather have my two positions and see it rallying, and then I can add on strength rather than take that third position because that's the one that's the most risky. That's a plan. Just stick to the plan. So here I am, and this is what I've got USX, which is US Steel, and that's the big question I've had. That's the reason why I think underlying all of this, there is something going on within the economy that is looking further ahead. At least at this particular point, I have to think that. Why? Because Alcoa is aluminum. Aluminum goes, a lot of it goes into the automobiles that are being made today to lighten them up. I'm not sure what's going into the steel other than infrastructure stuff. These are the heavy steels, really heavy stuff. But aluminum we know is used for lightening up products and you need strength. Well, Alcoa is at an all-time high. Well, it's at 76.80 on 3 days ago, it was at 77.95. Well, was that an all-time high? I think it is an all-time high. I have a difficulty talking about it because we once had it at 18. 17. 62.39. After it changed, it had a 20 round number low back in October 2016. It changed something. I can't remember what happened now, but they have a new. The symbol didn't change, but something structure changed, and otherwise it would go back decades. So 62.33 was the high in 2018. Plummets down to what was that? Like $5.16. Back in, I think it was March of 2020, and here it is at 76.80. Why are these really? These are the real cyclicals, the deep cyclicals. Why are they doing so well? So I'm saying to you that I believe that there is an underlying economy that isn't being recognized. The economy that might suffer. I'm going off track. We'll go off track's fine. The economy that might suffer is the HGX, which is the housing, Philadelphia Housing Sector Index. Just on the shorter term, it looks to me, if you put it together, look, there it is up almost to at 443, but triple bottoming here, trying to hold. It better hold the 439 area, otherwise it's in trouble. But if you put it together with Home Depot, it has the same look. If you put it together with Cintas, I'm jumping around because it's all the same thing to me. This is Cintas overalls, uniforms, and rentals. There's, I say a bifurcated market, but really there's a multitude of markets here that are being tested. And what we're looking at is within the context of where fund managers are putting money, I suspect that quite a bit is coming out. If you're looking at something like, let's go to a Pfizer, a great company, but look at this at its lows after making a high. I don't know if it was an all-time high up in the 60s. It's trading right now at 49.50. Not a big deal, but it's a big deal when I look at the monthly and I say, wow, that could be a monthly peak E. So that's what I'm saying about this rotational aspect. So for subscribers, we want to be looking at stocks that are going to be the recovery stocks, outdoor recovery, that is. We want to be looking at areas that maybe are under the radar. One under the radar area I thought was going to be okay, just okay, was where I thought senators were talking about maybe changing the payment plan. It's really a financial issue that needs to be dealt with at the federal level, and so it looked like it was going to. But there are so many things going on now. Anything like that, I think, is going to be shoved to the back burner. So my real issue now, and I'm going to go on to what we want to look at, and I want to go on. The real issue now is with the conflagration potential in Ukraine. with the yields, now I didn't do yields, so we'll just do the yields as part of my overview. With the TLT, trying to rally here, but in the big picture, I'll do this today, but for tomorrow, for my opening call subscribers, when I do my overview video, I'm going to take a little time to do quite a lot of things. In fact, it might be one of those longer videos. I'll do whatever I can in the beginning if you don't have time, and you know, for all of our positions and what we're looking at, and then I'm going to go into the deeper overview. Look, the 30-year, 10-year, and 5-year yields have just started today, last couple of days, pulling back a little bit. But if you look at the weekly chart, this weekly chart, yep, there could be a little double top here, but the yields up at this level are putting pressure on the Fed to do something. But a lot of the economic results that are coming out are saying to the Fed, you know, maybe this is the market's pulling back. It's going to be tough. I'll be back in a moment.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hello, so let me just finish off with this chart that we were looking at here. So this is the yields. This is the 30-year, the white one, it's the TYX, 30-T bond yield. This is the 10 and 5 T note yields, and they're pulling back a little bit. If you see wood, the iShares Global Timber and Forestry ETF is still holding well. So that's what I'm saying. When I look at this overall market, there is still an underlying buying, but there is such a vulnerability in some areas that the rotation could say, you know what? In about another 2 weeks or so, we might start to see some stabilization in the tech sector, that whole area that's just been slammed. And maybe we start to see the rotate with the weakness going into some of the areas that have held well. My biggest concern is that we close horribly today and then we just crunch to the downside on Tuesday. That could happen. So I'm wanting, look, every rally has failed. Now we're down 35 points in the Dow and 10 points in the S&P. That selling is just, that's why I say we don't have any options today. I didn't even want to buy the put side of the options because to get in, you got to get in perfectly because of the whipsaw. So going back to what we're looking at, here is the HGX, the Philadelphia Housing Index, right on key support. When this M pattern with the lowercase h, that makes a much larger one without taking out the high. And this could also be a cup formation where the lowercase h turns around successfully and becomes a cup formation. Now you've got your triple top. Look, your triple top, the 538 area was back in May or so of 2021. And then you go to what have we got there? 509. And then you got a double top, did I say 509? I mean 530. Then you get 531 in January. These are things that I respect, double tops and double bottoms. But now if we take out this one, there could be the mini 1-to-1 to the downside from the first arch, which says that you could have, 20 points or more pullback in the HGX index. And that doesn't make it the end of the world. Look at where it's come from. I mean, it's come from way down here to 175 back in March of 2020. So this is a spectacular move. I mean, really, it just deserves a bit of a breather. But that wood is the same. Now, let me come out of this. So what I'm saying is that yields stalled before going to new recovery highs. That was really important. That is the high above the high that was made back in March the 19th. And the as 25, I think it's 25.05. Yeah, 2.505. That was in the 30-year. So this is an important moment. And what did we get? We got the high this week of 23.87. This is one of those double tops. We'll see because it's a cup formation. So all I'm saying is that I want you to see for today, let me get out of this. I want you to see that, close space, save, always save, got to save here. I want you to see both crude oil coming down and much sharper, I'd say below. Here it is at 89.53 coming back from the low of the day, which is 87.46. And I said, I want to see it trading below 87s. And that'll say to me, aha, now we've got more of it. It's just, we start off with a near term, then we can go to short term. We're talking about a week or two, if that, maybe days to a week of a pullback, down 42 cents at 89.63. As long as there's something going on that deals with Russia, you've got to consider that oil is in the bargain. I don't want to go into anything else other than that. And now I wanted to include gold. Well, gold, I mean, look at this. Gold is down 4, big deal. Down 4 points, having made a new recovery high in the continuous contract of 1905.00, above yesterday's round number 1900, but it did go a little above that in the end. What I'm looking at is this is a leg C in the monthly chart. That's improved. This is a leg D in the weekly chart. And if you look at the GDX, those are the miners. Now the miners are starting to actually improve a lot because of gold, the gold price. So it says to me, now this is something that I came up with a few days ago. I was looking and I said, there's just something so important. I'll spend a little more time on it tomorrow for my subscribers when I do my overview to the opening call newsletter. Look, we've had so many aspects where you sector rotation. What if we're getting, look at this OIH, look at that massive move from 60 round number low back in 2020 to where we went to just the other day in the 250s. That's a huge move, and it hasn't had anything more than one big retracement in the weekly chart. You can see going from 230 down to 170. That's a big move down. And now this is a big move up. But now the stochastic's flattening out in the weekly. A flat stochastic, you don't want to see it go up and then immediately turn down. You want to see building strength in the 80s, preferably 88 to 93. As long as that holds, that's very bullish. So what are we looking at? We're looking at commodities. You remember the DBA, which we are long from the 13 area, is trading at 21.08. Somehow or other, look, I thought wheat at least would pull back and made that peak the other day. And it's up 5 3/4 at 803. I thought that soybeans had a spectacular move up to a peak D. It looks like the DBA is holding beautifully. Look at this weekly chart. Look at the left side, right side, price time match. And that leg A, they went to a peak A in the monthly chart. This is a continuous contract. It says usually at this level you get some kind of a double top. That's what I drew in here from the peak D back in 2021 in the 1600 area, and pulls back to the 10-ish. And now look at this. We're right back. So I thought maybe for a little while we'll rotate and see the commodities start to take a breather. But actually, look at this. Corn. Corn is trying to tackle the last high. I have to tell you something. You remember I brought this up just recently. I said, everyone talks about advanced micro devices. No, change the symbol. Look, it's ADM, not AMD. ADM is the Archer Midland. This is Archer Midland's what is it? Oh, I typed it in, then I forgot. Oh, there it is. Archer Daniels Midland Agricultural Sector. Leg C in the monthly. A leg E in the weekly. A peak C holding at that double top level. There is an agricultural storm of buying going on, and that's going to be reflected in stocks like a GIS. I think they won't be able to keep raising prices. At a certain point, General Mills Foods and these other companies, the staples, I think they're going to find a problem. That's what I wanted to spend a little time on today, just to say, look, we've got a rotation going on. The rotation seems to me that it has now started to include gold as just stair-step moves, higher highs and higher lows, and that's really important in the weekly chart. And I think this is a place that you have to now consider as part of a portfolio. What is this all about? I'm just saying, as part of a portfolio, it's really important that you don't get sort of stuck in the stock market. There are other areas. So be reflexive, be adaptable, and just have enough money ready to put to work. That's really what I've been trying to do for my subscribers. We're trying to raise money, and even our very long-term stocks, I'm prepared now to sacrifice them to create a nice cushion to be able to get into the market when we get a major low, and that will mean that the VIX screams higher. I don't know if it'll break 38.94. I'd love to see it in the 45.50 area, and that'll be the top we're looking for in the VIX.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Although, just quickly, that dreaded H, remember we were talking about that? Sometimes it would be quite large, made up of little H's and M's. Look at this. Here's the E-mini. They made a low after that peak D top back at about just after 8. It plummets down to a low at 835 of 43.59.50. Then it runs up to peak A, peak B, peak C, makes a little arch, but holds nicely. Makes another quick arch, goes to a D, and it has a big spike up to a peak E with a doji high, and then plummets down, and now we've made a lower low. That's just the pattern that we're looking at. Okay, so a bunch of questions came in that I think I'll deal with right now. So the first question, actually, let me go to the first question. I want to go in order. It's only fair. So in the Tiger YouTube, the question is all about Intel. Now, I've looked at Intel many times over the years as people have said, oh, Intel. And I thought, they don't seem to be leaders. Now, Dave White is the expert. I'm just talking about looking at the chart pattern. They have that double top that was made back in 2020-ish at about 70, and then it comes all the way down to the 44-ish area, and then pops up to the 68.49 level. So you've got 69.29. And what does it do within 1 point to double tops? I mean, how many times have we seen this? It's just, I can't believe how markets do this. 68.49, and now it's about to take out this rectangle formation at the bottom with the dreaded H pattern, a double dreaded H. This is a lowercase h. They went to a lowercase m, and it's the rectangle. I don't see anything in Intel. Maybe they got some product. They just took over an Israeli company. That'll take a little while for them to get it. It'll take 6 months at least before they get everything smoothed out. I remember when they took over, not SSYS, whatever that is. I was in Israel at the time, and I actually had just met somebody who worked for this company, SSYS, which is called, it's an American company, but they're really stationed mostly in Israel. Stratus, this is like DDD 3D systems. So this is Stratasys. And I remember saying to myself, wow, Israelis really come up with fantastic products that get bought all around the world. So all I'm saying is that I don't see anything in Intel at this particular point. I do see a stock that could very quickly go down to the 30s, and then we'll see what happens. I mean, it seems like this is a last desperate effort to catch up to the applied materials, etc. AMAT, holding 167.06 was the last high, not the last high, and then it plummets down to the 120s, bounces and comes up with great earnings. And look at this, there's that arch formation. So I think that the semiconductor area is in trouble right now. They'll be back. They have to be back. But look at this. NVIDIA, same pattern on the 200-period moving average. So I'm just saying I would not be looking at Intel. If you want to buy, look at MU, how nicely it's done, and look how nicely it's holding. It's the superior chart that I'm looking at right now. This is MU is Micron Technologies. If anything, I'd be looking at something that would lead the pack when this consolidation is done. Okay, I'm done with that. Now let's go to Halliburton. Leg F in the monthly chart. This is a stock that's just been around forever. It's oil services, I believe. I can't remember exactly what they do there. I should after all these years of following it. This is a stock that went to a high back in 2015 of 74.33. But am I right? I'm going to squeeze this close. Squeeze. Yeah, that was the high. I remember having fantastic rallies, but that was the high. And that was back in, that was at the 70, what did I say? No, there it is, 74.33. Has a little bit of a dip and goes to, from 74, it goes down to $4.25. It just forgot about the 70, just took it away and dropped down to $4.23. Now it's run all the way to the 32 area. So I think that Halliburton is in a more concerted, because it broke this left side high that was resistance, that was right there. Now what I want you to do is, just for the moment, I'm going to say, I like it looking out. Now, I don't know whether you're looking at this as an investment, meaning that you like it longer term and you want to know where to add to it. Was that the question? I think that was the question. Halliburton, yeah. I am long and not sure if you see it pulling back. So this is what I'm looking at. You see this chart pattern. Forget about what it is. You see this chart pattern right here coming up. I don't know why it keeps doing that. You see this chart pattern coming up right here. I probably typed it into the wrong place. Type it again. You see this pattern on the left, so daily chart. You see that consolidation, 137 round number high, pulls back, whatever this is, goes to 139.43, 7 or 8 sessions later, pulls back, and then goes to 139.44, a penny higher, double top, and pulls back. So when I'm looking at this, I see CVX as telling us, together with crude oil, that some form of consolidation. So that means that the geopolitical scene could just, it could not be effective in oil just at this moment. And I'm just going to say to you, for Halliburton, questions came in. Devon, I'm going to put them all together. Devon, let's just see what the chart says there. You'll notice that all of these have notations. I've done every single notation in all my thousands of charts, do them by hand. Steve Rhodes has done a really great job in developing at least a core way of looking at Chapman wave notations, but I also do I count each successively higher peak, etc. So sometimes you can get fluctuations, but he's automated. I love it automated, but there are variations that can kill you. So I'm calling it a C for now. I can't call it any other way in Devon. So what I'm going to say is, rather than say to you, take a little bit off, if you're a little nervous and you ask me the question, and then see where you want to put that back, I'm just going to say, hold your core position. I'm going back to HAL because that was the question. Halliburton, HAL, trading down 78 cents at 32.19, having made a new recovery high of 34.32 on the 16th, 3 days ago. I'm going to say, why don't you do this? Why don't you hold off, and on any sudden decline, I'd have to wait, because if it closes underneath the candle of the 15th, under 31.05, then I think this whole area could be a consolidation. Hey, from 34 down to 30 or even 29, 11 or 12% consolidation from going to the serious high that it's just made, I think that's reasonable. So, yes, I agree, because it's a leg C in the weekly chart. Now, leg C could pull back sharply, but because I still expect a leg D in the weekly chart, I agree with you. Yes, I would be buying. Let's look at it again. I'm going to do some work over the weekend, because I'd like this for subscribers. We had MRO once, and we don't have it anymore, unfortunately. The little profit we took, it's actually not that much higher, but it's higher. And it now finally made its leg D, and it should consolidate. All of these are acting so well. I would say, rather than playing games and going in and out, you have your core position, and I agree. Rather see where you can add to it, because here again, it's leg C, Marathon Oil, leg C in the weekly chart. It is leg E in the monthly, but this is, It's acting really well, and it goes together with the oil service, the OIH. I'm typing the wrong place. So let's look at where to add on Tuesday, but those are the areas that I'd be looking at. I'll be right back in a moment. Basil Chapman will look at MOS, but then I'll start to do some of those automated Chapman wave support resistances.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Let's just talk about patterns. Remember the dreaded H pattern, the lowercase h pattern. Look at this. Here's the E-mini 120-minute chart. Goes to peak A, peak B, peak C, peak D. And now it's arched all the way over. Left side, right side, almost a price time match. And look at this. It better hold 43... the 43.58 level. If at any time today it goes below 43.52, that's not going to be a good sign. So just wanted to do that. Okay, a couple of things as I'm wrapping up here. I want to go back to what we were looking at before. There we go. So I said that I would do this. So Intel, look. This is Chapman Wave automated. These reds are the support levels, the blacks are the resistance. It's just gap down. 44.71 is the left side low. 44.31 is way back there. You break the 44 support, and that is not a good sign. That's Intel. We were looking at, let's just run this now. We're looking at Halliburton. So Halliburton, look at the tops here. This is the daily chart. 333.72 has a chance to go to the 35s. But I don't have any support levels. So that means that if there is a serious decline now, you have to wait to rebuild support levels. And that says that whole area of 30 is really key support. But the fact that all the technicals at this point are rallying very strongly says that it's more like the magnet to the upside that's important. And if any time in the next week, going to Friday, a week from today, there is a break into the 36s, that is a magnitude of breakout that is really important. So I'm saying it's holding well. If I do this, let's go to gold. Gold right now, gold 180.99 is the automated resistance level, and you can see it's just pulled back from there. If gold breaks out on Sunday night going into Monday when we're on vacation, that's going to be a huge breakout. So I'm looking at all these. Look at crude oil automated Chapman wave notation here, CL, as we go off. I'm going to hand you over to Larry Pesavento, who is here, and he's got a great program coming up. He just mentioned what he's going to be talking about. And 93.55 is the automated Chapman wave resistance level in crude oil. Let's see what happens. Have a wonderful long weekend. See you on Tuesday. Check